What's going on, guys? Mike, aka Crypto Jules here. My first video that I'm going to share with you guys is just a 50,000 foot view of what Elliott Wave structure is, which is my primary basis of market analysis. I couple that a lot with price action, but I'll go into that in a different video. This is again just a summary of what Elliott Wave. So Elliott Wave theory was developed by a guy named Ralph Nelson Elliott, and he believed that charts and pricing is basically human behavior mapped out on a chart, measuring psychological swings from pessimism to optimism, and then back, in a natural sequence, basically. They're comprised of two different types of waves. You have motive or impulsive waves, and you have corrective waves. So impulsive waves are 5 waves up that are actually, well, have to be up, 5 waves going in the direction of the trend. Right now with crypto, we're in a bull market, so the direction of that trend is obviously up. So the motive waves are going up in 5 waves. In a bear market, it would be going down in 5 waves. And then your corrective waves are 3 wave structure, typically labeled ABC. There's more corrective waves, types of corrections than just ABC. You also have ABCDEs, which you can see here can typically form what some people call a pennant or a bull flag, or symmetrical triangle, whatever. And then there's also a complex corrective wave, which can be denoted as, you can see over here in the tools, it can be a WXY or it can be a WXYXZ. Again, not going to get into those right now. Those are very complex and would require a whole nother video, which I will do eventually. Just wanted to kind of dive into the basics here. So each one of these waves is actually, as you can see here, 5 waves as well. 3 waves down. So your first leg up, which is your wave 1, is comprised of 5 motive waves. A 1 up, a corrective 2 down, an impulse 3 up, a corrective 4 down, an impulse 5 up, and then that creates an entire 1, and then you have an A, B, C down to form your 2, and then the same thing for your 3, and then a corrective wave for your 4 up to your 5, which is another 5 wave structure, down to your last corrective wave ABC. So this is what Elliott Wave called, waves to a larger degree. So every single subwave is comprised of basically 3 impulses up and then 2 corrective waves down. And again, I'm saying up and down right now, which again, it's not always up and it's not always down. Your motive and your impulse waves are in the direction of the trend. So in a bear market, it would obviously look like that. Would be your and then your corrective wave would actually go up in price. So here's a bear market, sure, and then there is a bull market. So don't get a corrective wave confused with always going down, because corrective waves can go up in price when you are in a bear market. and don't get impulsive waves always going up, because as you can see in a bear market, they can go down. Hopefully that makes sense to you guys. I'm obviously new at this whole YouTube thing, so I'm sure I'll get better with it as I go. Don't forget to subscribe to the channel if you like it. Please comment, give me feedback, good or bad. You're not going to hurt my feelings. I really, could give a shit less if you guys, tell me I suck and I need to do this or I need to do that. I want this to be an interactive learning experience, an educational tool for you guys. So if I'm not providing the information in a way that's conducive or understanding, then by all means, let me know. And at the same time, if I am, providing good information, I need to know that as well. So good or bad, don't hesitate to comment and share it with me. I'll take all the constructive criticism I can get, and I will implement it moving forward. And plus, it also lets me know that you guys actually enjoy the content and want me to keep doing it. I'm not going to keep creating these videos if it's not useful for anybody. I mean, I'm doing this for free. It's something I found that I enjoy teaching this, because I've got a couple buddies of mine who over the past couple months I've helped navigate through the most recent correction, where they ended up doing really well. They didn't freak out, they didn't sell the bottom, and lose a fuck ton of money or anything like that. And that actually brought me a lot of joy and a sense of value to be able to help some buddies through the crypto market, because it obviously can be very volatile, and you can lose a hell of a lot of money if you don't know what you're doing. When I started in Bitcoin back in 2013, I actually bought the top of that 2013 bubble. About $1,100 is where I ended up buying, and ended up buying the entire bear market down all the way to $200. My average buy-in price was about $450, and I got into Bitcoin not knowing anything about markets, technical analysis. I didn't even know what technical analysis was, for that matter. I didn't know what Elliott Wave was. I didn't know any of that shit. So, I had to research it and figure it out on my own. And I wish that there was somebody that provided this information for me to kind of help guide me along my way. It would have probably saved me a shit ton of money. But you still got to put in the work. Everything, research the shit out of Elliott Wave, research the shit out of price action, technical analysis, anything and everything you can. Just Google anything and everything and just soak it all in. There's some good people on Twitter to follow, just, kind of reverse engineer what they're doing. If you see an Elliott Wave guy, look at his charts, look at what he's doing, pay attention to it, and just study it. And eventually it'll click. That's what it did for me. I mean, once it clicks, and you're good to go. So I hope you enjoy. Give me some feedback. Take care. Talk to you guys soon.